Hey, Olivia, how are you doing? Quick question. Did you just hop on like one of the previous links, or was this the link that got sent to your email?
Okay, can you hear me?
I can hear you.
Sorry, I'm traveling. Um,
Good.
yeah, I
Okay.
clicked on the link that was sent through my Google Calendar. Is that the wrong link?
No, that's the right link. Okay, nope, just double check. Okay, everybody else is here. Cool. All right, just double checking. All right, we're
Um,
solid. I appreciate that. Thank you.
no
All right.
problem.
Safe travels. All right.
Thank
What's going
you.
on, everybody? Getting into it tonight. We're going to be talking a little bit more about market psychology and how mainly to manage your trades properly. So I'm going to hopefully get into a trade to show you guys a few things by the end of this session. Let me turn them on camera. There we go. Uh, and I'm going to go ahead and kind of get into it. I just want to talk to you guys about a few things that I know is going to help you, and hopefully I can give you guys tangible examples, the big thing that I like about trading is that, like I said, you can apply everything right away. As soon as you learn something, you can take it to the market and you can go ahead and practice, so that's super major when it comes to being able to excel in trading. The fact that you don't got to wait for a mistake to happen, like just go make the mistake in your demo account and right out from there. Very easy learn. So tonight we're going to go over mainly how to trade properly, how to manage your trade more importantly. It's one of those things that when you do have an open trade or if you do receive a signal or at some point in time you're going to receive drawdown and you might not get in where you need to get in at, right? You might have missed a position, might have had to cook dinner or something. You got in a little late, or you got in at the wrong price, right? Now you have to take drawdown, right? And so one of the things I want you guys to understand when you're managing your trades, you have to understand it happens. It happens, and it's going to happen. And to be all the way honest with you guys, it's a lifestyle. You want to get used to it happening because if you're seeing that there's room for error or room to improve, then that means you're becoming a better trader just by being aware. You got me? So I want you guys to think about that. But understanding that it happens, letting it go, being able to breathe and just let it go. You're gonna have a trade every once in a while that doesn't go your way. Be prepared for that, right? Also, just understand this is the life you're signing up for. So that's really what I want you guys to take from that main statement on basically it happens. Your goal is to turn your drawdown stress into Euro stress. You got me? That's the whole goal between, understanding everything about psychology when it comes to trading. If you can turn your Euro stress into, if you can turn your drawdown into Euro stress, and if you don't know what Euro stress is, it's basically kind of that feeling after you work out, you get a good workout and you're tired, your body's weary, but you feel good. And you almost want to think about your trades like that. And it's going to help you prepare for the next best trade if you can manage that emotional trigger properly. You obviously you enter the trade, you see you're losing money, now you have to do something about it, but you don't just want to react. You want to be proactive. You got me? You want to keep a proactive mindset while you're trading. So I'm gonna kind of show you guys exactly what I'm talking about specifically. I'm just gonna give me 1 second. Let me stop sharing. I'm gonna open up a demo account real quick and I'm going to show you guys exactly what I'm talking about because where I'm about to open a demo account and shoot from the hip on whatever happens. I'm going to show you guys how to properly manage your losing or winning trades because I don't want you to think it's all about managing losing trades. You got to learn to manage a winning trade as well too. That's part of it as well. Just there's a very yin and yang with trading, and the more you understand about it, the more you balance you'll become so that you guys can, continuously be consistently profitable. That's the whole goal, being able to manage and have a baseline on everything that you do. And I'm gonna call. I don't like to say the word robotically, but that's as close as you want to get to it until you start using bots to trade. So that's a whole nother thing. But anyways, let me pull up this account for you guys real quick, and I'm just gonna show you guys specifically what I'm talking about. And before I even kind of get into that, one of the things that is tangibly going to help you understand how to trade, make better trades, is to understand standard deviations. And I'm gonna share my screen here in just a minute, and I'm gonna show you guys exactly what I'm talking about because I'm not sure if you guys ever got into too deep into math, but standard deviations. And honestly, all that really means is what does it normally do and what's going on outside of that? Simple and plain. What's the outlier? You got me? So standard deviations. I'm gonna show you how that applies tangibly in just a moment. Give me 1 second. All right, we're gonna demo accounts. There we go. Let's see what this one does. Okay, cool. Yep. All right. About to share the screen again. All right, you guys see my screen. So I'm gonna randomly, we're in gold versus Australian dollar. I'm gonna randomly hit hit the buy and the sell, right? I'm gonna randomly hit the buy and the sell. All right, so obviously they're gonna go both ways. What this looks like now, let's pull up the chart real quick for gold versus Australian dollar. Show you guys tangibly how to manage trade. Whenever you get a signal, the thing is when you enter into early, it doesn't mean you entered in early. It just means you got in at a different position. I want you guys to start thinking about it as an investor's mindset versus being like, oh, I got into early. You want to think about it. Oh no, I just got in at an earlier position. You got me. If anything, that's really how you want to think about it, because what's going to happen? We just went in for a buy and sell trade. So that means that's called hedging, by the way. But we just went in for a buy and sell trade. And so, give me 1 second. Let me get you guys some. So, boom. Now, this is on the upside. If we're in for a buy, we're looking for this to be the profit. This is on the downside. Let's see where it puts it. Okay. So, all right. We can put, hopefully, guys, you understand that. So, this is the sell trade. This is the buy trade. All right. So, if we're in the markets right now, and 1 second, let me go ahead and we're in the markets right now, and price goes all the way up here so quickly. Like I'm talking about right after you place a trade, right? Right after you place trade, it might do one of these things, up and down for a little bit, right? That might not have been the best tool to use. Give me 1 second. Choose the freaking. All right. Let's say price takes off this way, right? All you would need to do instead of panicking, instead of, going to maybe revenge trading, you just want to use your tools and indicators to see how much the damage actually is, because you might not be in a losing position. You might still be in a winning position. And if it hasn't necessarily invalidated your trade, right? If it hasn't necessarily invalidated where you normally put your stop loss, where the stop loss is, then technically you're still in the realms of being in a good trade. So where you want to be able to mitigate and manage your trade and duplicate your profits is going to be, if we're in for a buy trade right here, right? We're in for a buy trade right here. Price goes up to up here, we're good. But if price comes down here, we need to be able to split the difference in our trade. And what that looks like, if we're going to our broker, obviously we got one trade up, one trade down, right? Oh, hold on, different account, sorry. All right, so we have one trade up, one trade down. Obviously, one is going to be more profitable than the other. So what you're looking at right now is two trades going on, right? If we're trying to split the difference on, let's say on this buy trade, right? We're trying to split the difference. If it gets down, we're at 46.53. If it went down to, let's say, 46.20, right? 46.20. Obviously, we made a mistake, right? If we're on a buy trade and it goes down, 20, 30 pips, whatever it is, whatever it goes down, we need to be able to split the difference to make the profits back. So if it's at 46.53 and it goes down 20 pips, we would get in for another trade and split the difference. It would need to go back up 10 pips. So if it was at 46.53, it would go down to 46.33, right? We would get in for another buy position. And of course, sooner or later the market is going to retract or retest and go back to where it came from, right? Wherever it started from. So with that in mind, if gold is going to do that, all you need to do is split the difference. If you went that, if you're negative 20 pips in drawdown, you would need to go up 10 pips at the same size. Or if how I would like to look at it is now you have even more probability to know that the market is going to go up before it goes down, meaning that you can increase your lot size. And so now when you're coming back up and you're splitting the difference, now your mistake can be profitable. And you do that by, if we got in at 46.53 for a buy, we're down $40 right now, right? If it went down to 46.23 or 46.33, we'd be down 20 pips. We would go up, we would get into a trade at 46.33, and then we would go ahead and let it ride to 46.43, and then close out that trade in the profits, and then close out the trade that you lost, that you're considering a loss. Does that make sense? Do I have questions on that right now? If there, let me break this down on how that will look, because what that does for you and what I wanted to bring up for you guys was standard deviation. That's the term I want you guys to, if you studying tonight, let's say like that. Give me 1 second, just taking some profits. Sorry, trading. All right, give me 1 second. Let me standard deviation. All right, standard deviation. I'm gonna go ahead and share my screen again. Where's the Zoom features when you need them? Okay. All right. So standard deviation. A standard deviation is a measure of how dispersed the data is to relation to the mean, is in relation to the mean. Let me say that one more time. A standard deviation is a measure of how dispersed the data is in relation to the mean, meaning the average, right? Low or small standard deviation indicates data are clustered tightly around the mean, the average. And high or large standard deviation indicates data are more spread out. And so what that basically means is, let's say out of all of gold's movement since it started at zero when gold was worthless at maybe $0, right? And all of a sudden, we're pushing 3,000 an ounce for the gold US dollar, right? So with that being said, that there's a whole average of how much gold is going to jump every single day. It's going to either go up a certain amount and it's going to go down a certain amount every single day, right? Now, what's the average move that it would make to make it out of the average meaning, give me 1 second. I'll show you guys on screen. All right. Okay. So if from here to here, this is the average. Oh, if this little green line that I just drew, if this is the average from here to here, that's the average range, right? Of it would be one standard deviation. So this is the average. Let's say this is past 10 years of this is how much on any single move, which obviously that's definitely not the case with gold, but let's say it was, and this is how much it would move every single candle, every single move that it made, right? If I was looking to get in for a better position, I would want to box in how much a standard deviation is. And here's what that looks like. Second, shapes. Do not use boxes, apparently. This is definitely the case. But I want you guys to notate on how to look at this when you're talking about standard deviations. And it's the last thing that I'm a harp on. Give me 1 second. Where? Okay, there we go. No, I'm tripping. Nope, nope, nope. All right. Nope, we're just gonna draw a tool. All right. So we're gonna call this one box right here. What happened to it? Okay. So we're gonna call this one box right here. Excuse my ugly box. So this is how much a standard deviation is. All I want to do after that, after I get one standard deviation, is I'm gonna see what are the chances that if I'm in drawdown, how many standard deviations is it going to go out of for me to get in for a higher probability trade or the next best trade. So obviously I want to look for the next box that would happen, because if from here to here, right, from here to here, if this is where one standard deviation is, I would want to know, brush again. Under that, I'm gonna try to, I know it's not gonna be the same exact, but let's say these are the same exact boxes. I gotta learn how to get the rectangles on here. I know it's on here somewhere. I just don't feel like finding it right now. But nonetheless, if this is another standard deviation, and I'm saying, okay, hey, this is how much a one single move is from here to here. That's how much normally one move is. Now, if it goes into another area, that's one standard deviation. So it would be one standard deviation away from whatever the normal average move is. And the way that you use that, I'm gonna get all these ugly boxes out the way because I just look super nasty. You could tell I wasn't an artist in school. These up out of here. All right. So how you use that is if we're in for a buy trade and you take some drawdown, and this let's say this box was one standard deviation, or where let's say your stop loss is right here, and one standard deviation would be right here. Now, so what are the chances that it would go under two standard deviations? What are the chances that it would go under three standard deviations? It's not likely, because that's not the average. And so the way that you use that is to basically use that information. You got to go to Google and you can type in gold versus USD standard deviation numbers, right? And see whatever the standard deviation is for each market that you're looking to trade. And when you understand what that is, it will help you get in and out of positions a lot sooner, because you know that it's only going to go up a certain amount and it's only going to go down a certain amount within a certain amount of period, within a certain period of time. You got me? Because anything else would be out of its standard deviation. I hope that's making sense to you guys. Tangibly, how you're using that is, obviously you want to make sure that you're using obviously indicators to see how much drawdown you want to take. You don't just want to hop into a position and then now you have two losing trades versus one because you didn't look at it, right? So you want to go back to looking at the charts when you're trying to manage your trades properly. You definitely want to go back to looking at the charts, see what the information that you have, see when the next support and resistance is there, when the next support and resistance is coming, right? And obviously that's going to be where you want to be getting into another position from. And it's not saying that you got to use a much larger lot size. It's literally just saying that you want to be able to take advantage of drawdown. When you lose a trade, when you're in a drawdown situation, it doesn't mean that you're not going to be profitable. You just have to remember to stay sharp. Turn that stress of drawdown, turn it into Euro stress, and prepare yourself mentally to say, hey, what's the next best position? All right. So finding your boxes, obviously knowing standard deviations, understanding how to use average true range and the Fibonacci. I have classes on that, but finding out how to use your average true, these little boxes in the background, those are average true ranges, ATRs, average true ranges, right? And then you also want to learn how to use the Fibonacci. So when I'm saying to basically go back to what's the next support or resistance level, now you at least have a place where you can get into a position from evidence or from a support line or an EMA. You got me. You're not just hopping back in the market just because it got lower. You see, you want to have some tangible tools behind that. You want to pull out the Fibonacci and be like, hold on one second. If I'm looking for a retracement and we got in right here, you want to. I'm gonna hold up. I didn't even do that right. Give me one second. One more time. I'm gonna go to the top to bottom for that standard deviation real quick that I was talking about. All right. So you want to give yourself at least this. I'll say it like that. You want to give yourself at least this. Pull out the Fibonacci. See what the next area is that it could possibly go down to, and that way you can be like, you know what? That's only $30 more. It's still before my stop loss, right? It's still within my stop loss, and from the movements of it, you can tell it's only going to go down so much, right? And so you can find comfort in that so you don't panic when you are suffering from drawdown. All right. I want you guys to think about it like that. So don't panic. Look for the next level of support or resistance, right? If you're in first sale, you're looking for if you're in first sale, you're looking for next level of resistance. If you're in for a buy, you're looking for the I'm sorry, if you're in for a buy, you're looking for the next level of resistance. If you're in for a sell, you're looking for the next level of support. Right? Where's it going to go down to? Or right? How are you getting that drawdown? All right. Always look at your chart for confirmation. A few do's and a few don'ts, and then we're gonna get out of here for the night. But do's, right? You want to manage your trades without fear of loss, right? Find the next best trade without fear of loss, meaning that if you enter a trade or before you enter a trade, clear your head. If you see it taking drawdown, clear your head. Don't be so attached to what's going on. Understand this is a business, and don't you shouldn't take it personal. The markets aren't against you. No one is out to get you. Might feel that way sometimes if you're in a losing slump or something like that, a trading slump, right? But if you're not in a trading slump, then hey, you just got to build up your mental toughness. You're preparing yourself to get better and better. Every day you trade, every trade you make is your next best trade, meaning you just got better just because you placed one more trade. All right, that's how you should be thinking about your trading style and your trading pattern when you're in these markets. All right, so outside of expecting drawdown, understand the difference between the next best trade and revenge trading. Do not end up trying to find the next best position in every single sign, every single indicator. Your MACD's telling you it's about the reverse. The Fibonacci saying that hey, it's already broke support, and you're still trying to tell yourself you're literally ignoring signs that you should not be getting in the market again, right? You should not be getting in the market again. Yes, things are always going to return, but this might be the time. It's a timing thing. Even after you're right, it's still a timing thing. That's why these signals that you get from Lions Wall Street, it's a timing thing. So, if you got the signal at 9:30, you want to check the market sentiment again at 12:30 if you're coming late. You got me? If you're seeing that signal late. It doesn't mean that you can't use it. It just means you need to know what's going on, what type of volatility. Did the move already happen? Go back and see what happened the last 2, 3 hours before after the signal. Did it already do its move? And then it stopped? You got me? So you got to be able to understand how these signals are to be used. Um, Outside of that, understand the next, not revenge trading is what I was getting to. So not revenge trading. And for those of you that don't know what revenge trading is, all that means is when you are losing or after you close a losing trade, now you're upset. Now you need your money back. Now you're ready to fight. The market done took your money. Now you're not even thinking about your 3 to 5 confirmations. You're not thinking about any of the technical analysis. You're not thinking about fundamental analysis. You're literally just hopping back in the market just to, all right, well, I lost some money. It's cool. You're self-sabotaging is what you're doing. You got me? And that's what revenge trading is. When you just hop in recklessly, it happens. Everybody does it at some point in time, especially when you start getting good at trading or if you're on a winning streak. It's something that can definitely happen because you want to keep that winning streak going because you've been trading so good and you just want to keep that going. And one of the things I'm going to tell you is that if you can't accept a small loss, sooner or later you'll accept the mother of all losses. And you don't want to be that person. All right. So yeah, understand the difference between the next best trade and revenge trading. Another don't for you is don't manage trades without expectations. You got me? So you got to expect it to be certain places, right? If you expect it to hit support, or it rebound all the way down and regress all the way to a supported area, and it doesn't do what you think it's going to do, then that's a reason to not get into the trade or to stay in the trade, right? Don't have those expectations. Already know where your support is going. Know where the markets could possibly go, so you know whether you need to get out now because volatility is right around the corner. If it headed that way already and volatility hasn't even hit, you already know. Don't set yourself up for failure. Take the loss. Move on to the next best trade. If anything, switch it up. If you were in for a buy and it went the other way on you, get in for a sell. Close out that trade, get in for a sell, and make it make sense. You got me. If that's what you see you need to do, but don't do that without the 3 to 5 confirmations. Don't do that without, pulling out the Fibonacci. Don't do that. Don't just jump into the market. That would be another form of revenge trading. All right. Now winning trades, because obviously that I'm talking about a lot about drawdown and the negative side of things. The last thing I want to go over these last 4 minutes is your winning trades. If you are winning a trade, you have to have the same mentality. You have to have the same mentality. Everything that I just told you about The losing trades and the drawdown and the Fibonacci and knowing support, knowing resistance. You want to know the same thing on your winning trades. The only thing that differs is your stop loss is going to be moved, right? It's called a trailing stop loss. And what I want you guys to focus on when I'm talking about trailing stop loss is the fact that you want to be able to lock in profits. So we're just gonna take off one of these and we're gonna go in for a buy right now. Or we're gonna basically I'm gonna show you guys what that would look like. All right, so this is the trade right here right now, right? So we got risk reward ratio that's not even important. So from 46.53 area, I got the price right here, 46.53 area. We're in for a buy, 46.89 area, right? So that's a lot of pips. Obviously, if we're up here in the 46.80 area, we're darn near we're home free. We look like that's if that was take profit number one, you're home free, right? At some point, when you start making money, the last thing you want to do is lose money. So I teach all my students to turn your stop losses into stop profits. So then you would move it up here, right? All the risks are gone. So even if it comes back out to zero, you still didn't lose any money. Get in for the next best trade, right? If the price comes all the way back down here, then now you got to get right. You get to get another position into the market, a better position. Even if it does close on you, you got me. Don't be scared about that. Now, a trailing stop loss, lastly, is let's say let me borrow this arrow because we don't need it anymore for that purpose. So let's say your stop loss, we zeroed it out right here for a stop profit. And then a trailing stop loss would be as the price is rising, all you're doing is moving up your stop loss. Maybe it's right, your stop loss is right here. And then it moves up some more, maybe another movement of volatility shifts and it's in a trending market. So then you move it up here. And then when it gets some more movement, you move it up here and you just chase, you're literally trailing the profits and you're locking in your profits along the way because you want that thing to run. You got me? Obviously, I'm not sure if you guys have heard this anywhere yet, but you know, you want to let your winners run, right? You want to let your winners run, let them go. And the way that you do that is by a trailing stop loss. Naturally, we do it sometimes. So kudos to those who's already doing that. But you want to make sure that you are also still using the same average true range, the same Fibonacci, the same support and resistance areas that you're scouting for to make it make sense. So if you're starting to hit resistance, you can take maximum profits instead of, oh, it went all the way up here, but because you didn't have a trailing stop loss, now when it did go back down, now you lost that much. And now you just salty because you were up 150, 250, $300. Now you made $75. And now you want a revenge trade to try to make that gap get filled mentally. You got me? So those are the type of things that I'm talking about. But nonetheless, I feel like that's a great lesson for the day. Do I have any questions about what I covered just now? All right. I'm gonna have some slides more than likely tomorrow. We'll see. Kind of deciding where we should go. If you guys have any questions later on, or if there's something specific that you want to talk about, feel free to email us at info@lionheartmotivationfactory.com. That's our company email. Our company corporate line is 833-563-4763. I forgot which option it is, but nonetheless, leave us a message if you want to learn more about Lions Wall Street. All you have to do is go to lionswallstreet.com. Our services and our products are coming soon for the course, by the way. Everybody's looking for the course. And anyone else who I have not reached out to yet, just give me some time. I will get to everyone as quickly as possible. I appreciate all the support. Thank you, and I hope you guys are learning a lot, and I hope you guys are taking it to the next level in your trading game. I want you guys to be consistently profitable, and I want you guys to be able to break these generational curses, these financial generational curses with me, all right? So that's what we're here for. Let's continue to get it. Let's continue to grind. Stay focused. And I will be back in the markets Monday morning. And just lastly, quick update. Wednesday's class is going to be at I think I scheduled it for 8. Pretty sure I scheduled it for 8. But yeah, 8 to 8:30 instead of 7 to 7:30. So I'm sorry if that does cause a little bit of inconvenience for you. I'm just getting some things together spiritually wise, and I would like to lock in that time for Bible study. But nonetheless, if I'm here for you guys. Give me a call. If you need anything, if you need help with your trading plan, I can also coach you guys through finding a strategy that matches the time frame that you like to trade, matches your personality style, and obviously, profits. So, depending on what you're looking for, I can figure out a scaling trading plan for you that will work, that can consistently keep you profitable without you having to sweat, without you having to panic, and making sure that this process isn't painful. All right. But I'm done talking. You guys have a good one. Take care. You guys know where to find me. LionsWallStreet.com. You guys have a good one. Have a good evening.
Appreciate you.
Yep, yep. Appreciate you, King. Yep, yep, definitely.